Shares of Broadcom slipping about 4% in the after hours after they reported their Q2 results. Before coming into the sprint, shares were on an absolute red hot tear and giving up some of those gains after they reported their results. We'll go into their Q2 print from a revenue and a profit perspective. We'll talk about their different business units on that semiconductor side, printing about $8.5 billion in quarterly revenue. On top of that, they have a nearly $6.5 billion software business that produces nearly 90% gross margins. From a financial perspective, I mean, things look absolutely great. And then we'll take a look at the financials as well, the technicals as well. So this one has been making a very nice staircase higher over the past couple of years. The conference call is just underway. I won't have a chance to listen to it right now or today. Probably come back on my X later tomorrow and give you a recap on that. Follow me on X if you haven't already. Hey guys, hope you're doing well out there. It's time to take a look at shares of Broadcom Incorporated, trading up to nearly $260 before coming into this print, close to its all-time highs. In fact, making new 52-week highs just, I believe, today or yesterday, giving up some of those gains in the after hours. Even year to date, you're up about 14% on your shares of Broadcom. Now, Q2 came in with a revenue print of about $15 billion, exactly $15 billion on the nose. That was good for 20% growth year over year, beating those estimates on Wall Street. You also got a earnings beat as well of $1.58. Now, this company did provide adjusted EBITDA of roughly $10 billion for the most recent quarter. That was basically 67% of their revenues. That's right. That's not 67% gross margins or 67% operating margins. That's 67% EBITDA margins. I mean, that should tell you that the profitability, and especially when we get to the financials, I mean, things look great over at Broadcom. On top of that, you're getting extremely good cash flow from this company, about $6.5 billion of quarterly operating cash flows. And on top of that, this company isn't spending a whole lot, especially building out fabs or data centers like other companies are. And so you're generating a lot of that operating cash flows straight into free cash flows as well. On top of that, the company did provide a dividend. They tend to do so every quarter. We'll also talk about the dividend in just a few minutes, but you also got a pretty hefty buyback in the most recent quarter from Broadcom for roughly $4.2 billion. And when I took a look at this, I was a bit surprised because this is a pretty big buyback for the most recent quarter, especially if you know Broadcom. You know, this is a company that has a fair amount of debt on their balance sheet. And so seeing a large buyback in the most recent quarter had me wondering why that was. And so what I did was I wanted to calculate the average cost that Broadcom picked up their shares at. And when I did, it was roughly $166 a share. And considering the fact that shares are trading closer to $260 in the after hours, I mean, they got a pretty good price for these shares in the most recent quarter. Especially when we took a look at the technicals, you'll see this one had a major dip earlier on in the quarter, and seems like Broadcom management were able to pick up their shares somewhere here in the 160s. And so for that reason, that's looking pretty good. They also provided guidance for the upcoming third quarter, which looked pretty darn good, as revenue guide for the upcoming quarter of $15.8 billion. That came in slightly higher than consensus of 15.77. They also provided adjusted EBITDA guidance, roughly 66% of revenues in the upcoming quarter. Consider the fact that in the most recent quarter, adjusted EBITDA margins were roughly at 67%. So I mean, things over at Broadcom look fairly good. They came in with a double beat. They also came in with a guidance beat for the upcoming Q3 as well. As you look ahead for the next couple of quarters, really for the rest of the fiscal year over at Broadcom, I mean, this company will grow revenues easily in the north 20% range. And then as you look ahead to maybe next year, next couple of years, 15% revenue growth is at least expected over the next few years. I don't know when this company will begin to grow revenues slower than 15%, but probably not for any of the upcoming years. Now, they also did unveil a new chip focusing on improving AI performance. This news coming out, I believe, 2 days ago, where they released the Tomahawk 6 switch, which is part of their Ethernet switch product offerings that is capable of providing double the bandwidth of any Ethernet switch currently available on the market. So again, that should tell you this company, similarly to how NVIDIA is always 1 or 2 steps at least ahead of the competition, especially on the networking side, on the custom silicon or the custom GPU side, Broadcom, of course, is the market leader, and they're continuing to stay ahead of the competition. They also said that the Tomahawk 6 switch isn't just an upgrade, it's a breakthrough. It marks a turning point in the AI infrastructure design and bandwidth and power efficiency. And so they also did say that it's poised to make a rapid and dramatic improvement and impact on the deployment of large AI clusters. And from Broadcom's previous earnings calls and previous earnings report, we know this company has very, very big, large hyperscaler customers. In fact, they have 3 large hyperscalers on board, expected to deploy a nearly 1 million XPU cluster by 2027. And this XPU is essentially just custom GPUs, so the things NVIDIA makes, but custom for those hyperscalers' needs for their individual products. And so they already have 3 of those hyperscalers expected to put out 1 million XPU clusters by 2027. They also, I believe, have 4 other hyperscalers expected to get on board. And I mean, their serviceable addressable market, they said on the previous conference call, somewhere between 60 to 90 billion dollars. We'll see on this conference call if they maybe raise that, if they at least reiterate it. That should help out shares in the after hours also moving forward as well. Now, I did mention at the top, the dividend is something this company does tend to pay. Currently, their dividend yield isn't something crazy. It's right around 0.9%, but historically, this company has had a higher dividend yield, considering the fact that shares have moved up so rapidly over the past couple of years. That yield has come down. But this is a company that's grown its dividend over the last 14 years at a CAGR of roughly about 15% per year. So you're also getting very, very solid dividend growth with this company as well. You don't have a lot of semiconductor companies out there that are giving you at least a meaningful dividend. I know you get a dividend with NVIDIA, but it's right about 1 cent per share. And so with Broadcom, you're actually getting a decent dividend, at least I would say. But more importantly, you're getting dividend growth, which allows you to hold shares over a long period of time. Now, in terms of their different segments for this most recent quarter, I mean, Semiconductor Solutions, think this is their custom XPUs, custom silicon, custom GPUs. That's coming under the semiconductor business of roughly $8.5 billion, growing roughly 17% in the most recent quarter. On top of that, you have a nearly $6.5 billion quarterly software business that prints roughly 90% gross margins, growing at an even faster clip of 25%. So, I mean, that should tell you, when we take a look at the financials in just a second, you'll be shocked to see how fast this company is growing their bottom line earnings. A lot of that is, of course, has to do with the CEO, Hock Tan, controlling costs very nicely, but some of that actually has to do with the fact that you're growing a business that has roughly 90% gross margins faster at 25%. So again, when you're growing your highest margin business at a faster clip, well, then that should help your bottom line profitability pretty meaningfully. The other thing they mentioned on the press release was the fact that in this most recent quarter, AI revenues came to roughly $4.4 billion, growth of roughly 46% year over year. And in the upcoming Q3, AI semiconductor revenue is expected to accelerate up to $5.1 billion, delivering 10 consecutive quarters of growth as well. So when you take a look at this guidance figure of roughly $15.8 billion for the upcoming quarterly revenue, well, then you put on basically $5.1 billion of that is expected to be AI semiconductor revenues, again, growing at close to well north of 40%. That should continue to remain, and again, tell you the strength in the underlying business over at Broadcom, both on the AI side, but also on the software side, considering now their VMware acquisition has rolled in completely and is adding meaningful amounts of revenue to their top line. Now, by taking a look at their financials, I actually don't know if there's another company out there, especially in the semiconductor space, that's more financially sound from a cost perspective than Broadcom. And you'll see that in just a second, as they posted roughly $15 billion of top line revenues. Same time last year, it was about $12.5 billion. So they grew top line close to $2.5 billion. The interesting thing is the cost of revenues went from 4.7 up to just $4.8 billion. You added $2.5 billion to your top line, and your cost of revenues grew by just $100 million. That will absolutely explode your gross profit from 7.7 up to, call it, $10.2 billion. Roughly all of your net revenues came through into your gross margin. And then what's even more impressive is that continues on the operating side, R&D going from 2.4 up to just around $2.7 billion. SG&A actually ticking down from 1.3 down to $1.1 billion. You also reduced your amortization costs and your restructuring charges. And so your total operating expenses, despite higher revenues, higher gross profit, actually went down from 4.8 billion down to 4.4, allowing your operating income to basically double. It went from essentially 3 billion nearly up to $6 billion in the most recent quarter. Over the last 2 quarters or the last 6 months, I mean, it paints a fantastic story. Your operating income going from 5 billion all the way up to $12.1 billion over the last 6 months. I mean, financially, this company is one of the best out there to do it, especially because they have a CEO that's very cost conscious. He's not building huge amounts of flashy office space and leasing out really fancy buildings in the heart of California. Hock Tan is certainly a very cost conscious CEO, and that absolutely shows through in their financials. And then all things considered, your net income went from about 2.1 billion up to, call it, nearly $5 billion. You do have a fair amount of interest expense, but I want to point out it is actually reducing. Last quarter, it was at nearly $900 million. Last year, roughly $1.1 billion in interest expense. That's come down to about 800 million. Still a decent amount, considering the fact this company has a fair amount of debt on their balance sheet. And speaking of the balance sheet, cash and cash equivalents sitting right around $9.5 billion in the most recent quarter. Similar to how it was looking about 6 months ago, you're also sitting on about $2 billion worth of inventory. Actually a pretty low number considering the growth this company is seeing and considering the large customer base they have. On top of that, your liabilities certainly stand out a little bit. You have about $5.5 billion in short-term debt, an additional $62 billion in long-term debt. So certainly that nearly $66 billion worth of debt is causing this interest expense to be close to $800 million. And so that's why when I saw this company executed on that nearly $4 billion buyback in the most recent quarter, had me a bit surprised, considering certainly debt is one thing they could look to pay down, but considering the fact that the cost basis on that buyback was roughly somewhere here in the 160s, certainly don't blame them for aggressively buying back shares at a pretty attractive price. I mean, all things considered, your balance sheet certainly doesn't look great, but it is supported by a very, very strong cash flow figure, right around $6.5 billion in operating cash flows. That's over the last 3 months, and that translates pretty much dollar for dollar into free cash flow, considering this company doesn't have a ton of capex, just right around $150 million for the most recent quarter. And so with that cash flow, like we said, they executed on about $4.2 billion worth of a buyback, nearly $3 billion in dividends as well. They didn't really pay back any debt in the most recent quarter. We see last quarter they actually paid back a fair amount of debt. So my guess is if shares continue to trade at all-time highs, what this company will likely do is in maybe the next quarter, next couple of quarters, they'll come in and wipe out this short-term debt obligation right around $5.5 billion. Certainly based on their quarterly free cash flows, about $6 billion, they can absolutely afford to do that in just one swift quarter. So financially, I mean, things look great over at Broadcom, even from their different segments continuing to grow rapidly. It's interesting to see what Hock Tan will say on the conference call. Maybe will he reiterate their serviceable addressable market, or perhaps he'll actually say that it's likely to expand, considering the fact that they're bringing on more hyperscaler customers in the upcoming quarters. Moving on to the technicals, I mean, things over at Broadcom look great, and there's actually a pretty simple technical pattern to understand. It's been making higher highs and higher lows, trading all the way back to October of 2022. I mean, if you stretch it out even on a longer term, this company has been making a very, very predictable pattern of higher highs and higher lows. Most recently broke out of that when you had a lot of the tariff fears and trade wars, and then most recently actually popped right back into that uptrend. And so right now you're hovering right around in the middle of the uptrend. Certainly not an area I would be overly excited to step in and buy aggressively, but if you get meaningful pullbacks somewhere down to the 230s, you once again test the bottom end of this uptrend. That's a point where you can begin to continue to add into your shares of Broadcom. Certainly if you don't have a position, this is a point where you could look to maybe nibble in and add some shares of this company. I think this is a must-own company during this AI gold rush, especially along with Nvidia. It's probably the number 2 player, way ahead of AMD in my opinion. You have a handful of essential companies you have to own during the AI rush. I'd say Nvidia, Broadcom, you could probably throw TSM, maybe ASML in there as well, and everything else comes second fiddle. And so for that reason, I do really like Broadcom at these all-time highs. Probably wouldn't be super excited to add into shares, but wouldn't blame anyone for adding more on a pullback. You get a deeper pullback, well then you absolutely know what to do. You continue to dollar cost average, add more into shares of Broadcom. That was my take on shares of Broadcom. Be interesting to see what CEO Hock Tan does say on the conference call. I mean, considering shares were basically coming into the year nearly doubling over the past 1 year, it's tough to continue to move higher on your shares of Broadcom. But I think over time, especially over the next couple of years, this company can absolutely move closer to a $2 trillion market cap based on just the customers they have today and the commitments those customers have signed. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening. I'll catch you guys in the next video.